everyone, thanks for tuning in to the Freedom Watchdog channel. Today we're going to talk about the Bitcoin ETF, what it means for the Bitcoin price, should you buy it, and also what it actually represents. So let's get into it. Now, the first thing you need to realise about this Bitcoin ETF is there's actually no Bitcoin itself in the fund. So that means the price can deviate from Bitcoin somewhat, which I'll get into in just a moment. And also the fund itself will be even more volatile. The price will be even more volatile than Bitcoin, which is already quite a volatile asset. They've labelled this as a safer way to invest in Bitcoin, due to the kind of security risks there may be if you go online and buy it directly off a website. And obviously all keeping Bitcoin in a wallet and all that kind of thing, people don't want to do that. They just want the ease of being able to buy and sell it, which is somewhat a shame really, because what Bitcoin represents, at least to me, is a commodity, a way of holding our purchasing power and having something to trade with between ourselves as well, before our governments inflate away all our purchasing power with the currencies we use now day to day. And what could be arguably even worse, well, it is even worse, if they bring in a central bank digital currency and all of a sudden you can't buy anything that you used to buy and anything that you take for granted. But anyway, I don't want to get too far off track here. Just know that if you do go out and invest in this Bitcoin ETF, you do not own Bitcoin at all. So all of the benefits which make Bitcoin attractive, certainly for me, are gone with this ETF. You're just speculating on the price. And like I say, that price can also deviate away from Bitcoin itself. And I'm sure it will as well in certain extreme situations, which is something we'll get into now. Now, this is the ProShares website. They're one of the first, or one of the first anyway, companies to create this Bitcoin ETF. Let's have a look at what they say. The fund does not invest directly in Bitcoin. The price and performance of Bitcoin futures should be expected to differ from the current spot price of Bitcoin. Now, if you don't know what that means, all that means is future contracts are sold, and all a future contract is let's say me and you make one of these future contracts. I say to you, I will supply you 1 Bitcoin in 1 month's time, and you will pay $60,000 for that Bitcoin, let's say. And you're happy with that, so you sign the contracts. And you're also happy with that because you believe that Bitcoin in 1 month's time is going to double in price from what it is today. So that would mean in 1 month's time you'd be able to buy a Bitcoin for $60,000, whereas it's actually worth $120,000. So you'd be in the profit if you turned out to be right. And obviously I'd be kicking myself massively because I believe the price would go down, which means I've had to either give you one of my Bitcoins for half of what it's worth, or I need to go out and actually buy the Bitcoin itself and then sell it to you, which means I lose, $60,000. I'm $60,000 down. But one thing to realise is these contracts, they never really actually go through, and the item doesn't actually exchange hands. It just ends up being a cash settlement. So if that example happened that I just gave, instead of me going out and getting a Bitcoin and selling it to you for $60,000, I'll just give you $60,000 in cash, because that would be the difference between you buying it and what it's worth. So it still works out the same on paper for what the difference is in dollar terms, but no physical items. It doesn't matter if it's a Bitcoin ETF or gold or silver or oil or anything like that. The item itself never exchanges hands, or rarely exchanges hands anyway. It's normally just a cash settlement for whatever the difference is. Same if you turned out to be wrong and the price actually went down to $50,000, let's say. That means you'd be paying $10,000 more for what that Bitcoin's worth. So to save the hassle, I would just take that 10 grand off you for settlement. Let's have a further scroll down here and see what else it says. Now, I've read through all this, but I've just highlighted the things that I think are most relevant for you. There is no guarantee any ProShares ETFs will achieve its investment objective. This ETF may not be suitable for all investors. So basically all this here is just disclaimers, just to protect themselves legally, I guess. This ETF invests in Bitcoin future contracts, which is what I've just explained to you. It doesn't invest in Bitcoin itself, it invests in Bitcoin futures. The ETF does not invest directly or hold Bitcoin. The price and performance of Bitcoin futures should be expected to differ from the current spot price of Bitcoin. These differences could be significant. Bitcoin futures are subject to margin requirements, collateral requirements, and other limits which may prevent the ETF from achieving its objective. Now, like I mentioned before, these prices could be significant, as it says, and I can assure you they will be significant in certain circumstances. And another thing I need to mention here is this also opens up Bitcoin for a lot of manipulation now. I know it's already vulnerable to manipulation to some degree, but this is going to make it even worse, and I'll explain why after. Let's continue here. Bitcoin is largely unregulated, and Bitcoin investments may be susceptible to fraud and manipulation more than regulated investments. Bitcoin and Bitcoin futures are subject to rapid price swings, including as a result of the actions and statements by influencers and the media. Yeah, that's definitely true. This ETF is non-diversified and concentrates its investments. Non-diversified and narrowly focused investments typically exhibit higher volatility. Now, one thing you need to realise here is when it says this is ETFs are always more volatile than the actual asset anyway. That's the underlying asset, in this case Bitcoin itself. And the reason being is it's a financial derivative. Now, a derivative, in general terms, as an example, orange juice is a derivative of orange. And I do apologise if I'm insulting your intelligence there, but this Bitcoin ETF is a derivative of Bitcoin, just to put things in perspective. And whenever you have financial derivatives such as ETFs, like I say, they're always more volatile than the asset itself, because the people that fight tooth and nail in Wall Street have a lot of emotion running through them while they're shouting at each other, making these contracts happen. And you've also got now institutions which have a platform which is a lot easier to trade Bitcoin with. Now, I know they could have used, the other platforms or the crypto exchanges before, but now it's an ETF, it's going to make it even easier for them to use. And for them to manipulate the price, take out large short positions like they do with silver. So, how will this affect price? There's a couple ways it will affect it. At first, you can imagine all the institutional investors as well as retail investors. Now it's going to be so much easier to buy what they think's Bitcoin. I mean, the institutional investors will know anyway, they're just speculating on the price. A lot of money is going to flood into it, and you can imagine this will push up Bitcoin's real price somewhat off the back of it. It's already on quite a strong bull run right now as we speak. It's just about to break all-time highs. Maybe by the time this video goes out, it's already broke its all-time high. Now, the main things you need to take away from this video is, if you want to invest in Bitcoin, just go and buy Bitcoin itself. I know it's extra hassle rather than just buying an ETF, but it's definitely worth it. It goes back to if you're going to buy gold and silver, if you're buying it for the right reasons and not just for price speculation, just buy the physical asset. Why buy the ETF? They don't represent the true value of the underlying asset anyway. And if you believe in Bitcoin, you believe it's here for the right reasons, then just go and buy Bitcoin. Get yourself a wallet sorted out, because it's worth the extra hassle. And I can almost bet every penny I own right now that there's going to be millions and millions of people now which will pile into this ETF. It'll drive the price up, and this is going to make Bitcoin even more vulnerable to stock market crashes as well. And nobody's talking about this stuff, but it's definitely going to be a lot more vulnerable to price manipulation and stock market crashes as well. So if you're going to buy Bitcoin, buy it for the right reasons, but buy the actual Bitcoin itself, don't get the ETF. They're the main takeaways that you need to take away from this video. And please do comment below if you are actually going to buy this ETF just for price speculation. And if you are going to buy it just for price speculation, what price will you sell at? You know, what's a realistic target for you if you bought in right now at around 60? I think we're at 61,000, 62,000 right now at the time of recording. As I mentioned before, there's a lot of emotion right now with Bitcoin. A lot of people saying it's going to the moon. It may go to the moon, but that's drawing a lot more people in, and when people get drawn in like this, they usually get burnt. Will this be the exception? Who knows? But going back again to what I said earlier, a big red flag will be for me these large institutional investors which are hand in hand with the government. Look at what they've done to silver for many years, and gold as well, to suppress the price, because when the price is low, people don't want to know. It's boring, you know. People think it's dead in the water, and this is going to make Bitcoin vulnerable to that kind of thing now. And please do let me know if you have any similar concerns in the comment section below. So yeah, make sure you like, comment and subscribe. Thank you for watching.